Could your LLC legally save thousands of dollars in taxes every year? The answer is yes. S-Corp can save your LLC thousands in taxes every single year. In this video, I'm going to explain what an S-Corp actually is, how it can reduce your tax burden, when you should consider electing it, and the biggest mistakes that can turn tax savings into expensive problems. Let's start with the biggest misconception. Contrary to what many people believe, an S-Corp is not a legal business structure. You don't go to your state and form an S-Corporation. It's simply a tax election allowed by the IRS. Think of it as a tax upgrade. When used correctly, it can be incredibly powerful. And here's the truth. Most business owners don't think about S-Corps when they're starting out. At first, you're focused on getting clients, making sales, and growing the business. But as your income increases, one question inevitably comes up. Is there a legal way to pay less tax and keep more of what I earn? And that's usually when the S-Corp conversation begins. Now, not everyone qualifies for S-Corp status. You can only elect S-Corp taxation after forming an LLC or a C-Corporation first. Sole proprietors and partnerships cannot directly elect S-Corp taxation without first creating a legal entity. So what should you do? For most online businesses, freelancers, developers, consultants, Shopify sellers, Amazon FBA operators, agencies, and startups, an LLC is often the best starting place. Why? Because LLCs are simple. They have fewer formalities than corporations, no board meetings, no shareholder resolutions, less administrative burden. You get liability protection while keeping the flexibility to choose how you want your business taxed in the future. Now let's talk about the part everyone cares about. By default, if you're operating a profitable single-member LLC, your business income is generally subject to self-employment taxes. But with an S-Corp election, the IRS allows you to split your business income into two categories. First, a reasonable salary paid to yourself as an employee. Second, owner distributions. Your salary is subject to payroll taxes. Your distributions are generally not subject to self-employment tax. And that's where the tax savings come from. Here's a simplified example. Let's say your LLC generates $100,000 in profit. If you determine that a reasonable salary for your role is $60,000, that salary goes through payroll and is subject to employment taxes. The remaining $40,000 can potentially be distributed to you without being subject to self-employment taxes. That difference can translate into thousands of dollars in annual tax savings. But this leads to an important question. But here's the catch. S-Corp isn't right for every business. If you don't know this, you might be making a mistake that might outweigh the advantage of your tax planning scheme. Running an S-Corp comes with additional responsibilities: processing payroll, filing payroll tax returns, issuing yourself a W-2 each year, filing Form 1120S annually. If your profits are still relatively low, consider an S-Corp only after their income becomes more consistent. To elect S-Corp taxation, you generally file Form 2553 with the IRS. Existing businesses typically need to file by March 15th for the election to apply to that tax year. Newly formed businesses generally have 2 months and 15 days from formation to make the election. Choosing the right time is just as important as choosing the right structure, because electing too early can actually increase complexity without producing meaningful savings. Now let's talk about what can go wrong. Mistake 1. Paying yourself an unreasonably low salary. This is one of the biggest IRS red flags. Some owners attempt to maximize distributions by paying themselves extremely low wages. The IRS expects compensation to be reasonable based on the services you provide to the business. If they determine your salary is too low, they can reclassify distributions as wages and assess additional taxes and penalties. Mistake 2. Electing S-Corp too early. Many entrepreneurs hear the phrase "save taxes" and immediately elect S-Corp status. But if your business profits are still relatively small, the additional compliance costs may outweigh the tax benefits. The best strategy isn't the most popular one, it's the one that's financially appropriate for your business. Mistake 3. Poor bookkeeping. An S-Corp only works when your records are accurate. Mixing personal and business expenses, failing to document distributions properly, or making payroll errors can create serious tax issues. In many cases, the problem isn't the S-Corp election itself, it's poor implementation. An S-Corp can be one of the most effective tax planning tools available to LLC owners. But it's not a shortcut, it's not automatic, and it's certainly not right for everyone. The real goal isn't just forming an LLC, it's building the right structure at the right stage of your business. And when that structure aligns with your growth, profitability, and long-term goals, that's when the real benefits appear. If you're wondering whether S-Corp status makes sense for your business, bizfyle can help you evaluate your options, handle the election process, and keep your business compliant year-round. Visit bizfyle.com to learn more. And if you found this video helpful, subscribe for more practical guidance on LLCs, taxes, bookkeeping, and building your business the right way.